All right, what's up, everybody? Tim Sykes here with Jack Kellogg. We're continuing on explaining this journey. We're here in Dubai. It's pretty crazy. It's been a crazy 2.5 years since I went up to New Hampshire to see you. You were at $1.7 million in trading profits then. What are you at right now, 2.5 years later?
12.2 million.
Everybody, leave a comment below. Congratulate him on his journey, on his success, on his maturity. I'm wearing this shirt, Fairleigh Dickinson, FDU. They just were the second number 16 seed to beat a number 1 seed in the NCAA tournament. The seemingly impossible. I'm wearing this because what he's done, what I've done, what FDU has done, what now 30 plus of my other millionaire students have done is seemingly impossible, but it is possible. How do you do it? Explain to them.
Work hard, never give up.
A lot of people work hard, they never give up. There's like Uber drivers out there driving all day.
Be in the right industry.
Correct. Finance and more specifically trading, where you can legit, you take the same kinds of trades as you did before, but just with bigger size. There's exponential growth. Do you agree with that?
Yes.
Right?
Yep. Yeah, in December of 2021 was when I started experiencing trading larger size. So I had so much to learn because from 2017 in January to November of 2021, that's when I made $1 million. And how many years is that? 2020, 2017, 18, 19, 20? Nearly 5 years it took me to make $1 million. And then the next 2.5 years.
You made $10.5 million.
Yes.
And that's the beauty of trading. And this is what I want you guys to learn. It's okay to trade small in the beginning. It's actually better. In the beginning, you were like plus or minus like $100, $200. Year one, if you go back and look through all the videos that we've done, you can click the links below. But year one, you lost how much in trading?
$2,600.
Did you feel like giving up?
No, I didn't feel like giving up because I saw the patterns repeating themselves. And I knew the only thing that was wrong was my execution and how I was trading. But I saw people making money. I saw patterns playing out. And it was just me who couldn't execute the right way.
Well, there's two moving targets, right? Like the market is always moving, so you're trying to get in tune with the market. And then for you have to find like what patterns work. Like the market might be hot, but you might find a pattern that you love, whether it's dip buys, multi-day breakouts, shorting first red day, but your pattern isn't necessarily working that great. So ideally you find multiple patterns, and ideally you're there when the market is really hot. And in a perfect world, you're prepared and the market is hot, and then you nail it, which is what you've done basically the past 2.5 years. And the market hasn't even been that hot in the past 1.5 years, and you're still profiting versus most people, they're not. So what have you done differently the past year and a half?
Well, to be fair, in 2021, so actually this was December of 2020 when this...
Yeah,
okay.
Yeah, we filmed December 2020.
Yeah, okay.
Before the madness of 2021.
So 2021, the first month I made $1.5 million, and then February of 2021 is when I made $2.5 million. So that was
for the month.
Yes.
For the month.
That was another $4 million in the next 2 months after recording that video.
So think about that. That was when, if you go back and look through like my video lessons, all the OTC spikers, all the OTC plays were going supernova. Like there might have been 5 dozen or 6 dozen like big plays that would go from like a third of a penny up to like 10, 20, 30 cents, like 50, 100, 200 times your money. And it was actually interesting. We're looking back at his trades and my trades. We never take the whole move. And we're like, even like his biggest trades, he's selling before the stock like goes up like 5 times. Like TSNP, which is now HMBL, that was my biggest play. Is it one of your biggest plays or your
top 5?
Right? And we were selling way too soon. It went so much higher. But again, we're locking in our record profits or near record profits. It's okay to sell. It's okay to be too soon. The biggest thing is you got to get in tune with the markets. And you were in tune in 2021. And sometimes it happens very fast. I'll tell you, my first 4 months of year 2000, when we had the NASDAQ bubble, I made $700,000 as a college freshman, and I didn't have any rules, any risk management, no guidance, no mentor. Like, it's crazy to me. The last 8 months of the year, I lost 10,000. So like, it's not just like year by year. It's like when there's a hot market, can you capitalize? When it's not a hot market, can you sustain? Can you keep learning, right?
Mm-hmm.
Because now we're filming this in early 2023. This is April 2023. The markets, I mean, the NASDAQ is up 20% year to date, but it hasn't been like smooth sailing. What have you been doing lately?
What I've been doing lately?
Yeah, in 2023. Because you're already up, what, $1.5 million?
Yeah, I'm already up $1.5 million in 2023. And it's like what you were saying. It's just capitalizing when the market's high, when there's opportunity, when you're making money consistently every single day. And then you can kind of feel when the market's starting to change, in my opinion, after you've been doing this for several years.
Yeah.
And then, like you said, it's all about, you lost $8,000 in 8 months or whatever it was. 10,000 in 8 months. And for me, it's just hitting it when it's there. So January and February of this year were really good with a lot of bankrupt plays. And I capitalized on it because I was understanding the price action. And now this last month in March, right, I made 37,000, I think. And it's still great money, don't get me wrong, but relative to a good month for me is probably $300,000, $400,000, $500,000. So if I'm only making about 10% of that in a month,
It's a slow month.
It's a slow month. And it's all about just not forcing yourself to make that money because the plays aren't there for me to capitalize on, right? So since the market's slow, I'm sizing down. I'm waiting for that next hot wave to then start sizing up and then make an upward in my profit curve.
And FYI, right now, I'm not trading that well, so I've sized down dramatically. I was actually down the first 2 weeks of March. I was over trading. I just made an undisciplined trade the other day, just lost like $7,000 when there wasn't a good play. Then like a day later, of course, I was the day early, like the next day, BBAI did bounce. You're always trying to adapt. And like Jack is saying, when you're not on, when you don't like really feel it, it's okay to lose. It's okay to size down. It's okay not to trade. We're here in Dubai. Like, this place is amazing. Jack's first time. What do you think about Dubai?
Absolutely beautiful. I mean, look at the backdrop here. We have a Ferris wheel. We have a beach, beautiful pools. So futuristic, the entire city. And it's been great to experience this. And that's really what I've also been working on in the last 2.5 years is when the market is slow. Now I've had the freedom and I don't have that pressure to make a ton of money because I know when my A+ setup is there, my A+ month, I hit it hard, have already hit it hard the first couple months of this year. And when it slows down, I'm traveling, I'm enjoying myself. I look much better than how I did in 2020. And it's just about other things in life now because trading gives you that freedom to find your happiness. And to be fair, I was not very happy in trading in January or December of 2020. Because I was just pushing so hard and working so hard and not enjoying myself and being sick. That's when I just got over mono and strep, and I got COVID 3 months later after that. And I was just continually getting sick. I was continually being tired. I didn't have good energy, pushed myself super hard. And the last 2 years have been great. I've been super happy. I've been experiencing so much. So that's what I've been working on.
But it's the good and the bad, right? Like it's all about perspective. You might not have been happy when you were sick and you did push it, but at the same time, that's how you got to this good place.
Yes.
Like you have to go through the bad to get to the good. The sweet isn't as sweet without the sour. So I had one student emailed me the other day and he's like, Tim, I'm learning, I'm grinding, I'm not having fun. And I'm like, yeah.
It's not supposed to be fun.
Like the process of getting rich is not fun. Trying to, excel in an industry where 90% of traders lose, that's not fun. Trying to find your patterns, go through all the data, trying to adapt and optimize your process, that's not fun. You get to have fun if you succeed. You get to have freedom if you succeed. Most people watching this, you're in debt, you don't have a job that you like, you can't just go to Dubai whenever you want. We've been trying to travel, and I travel nonstop. So he's like, what's the next few cities? And I give him I'm here in Dubai, I'm going to Tokyo, I'm going to Bali, I'm going to France, I'm going to Turkey. Which one would you want to come on? And he came to Dubai. We have that freedom, but we earn that freedom, okay? You need to go through it. Although, same time, I wouldn't push myself so hard. Like when you had strep and mono, I was like, go see a doctor. You're like, no, I'm trading. So you have to find what works for you. don't push yourself to the brink of exhaustion or sickness. Sometimes pull back. And if you have the proper perspective, like this is what I hope to show you with Jack's journey, with my other students, with my own journey. This is a marathon, not a sprint. So you're not trying to like make $1 million and then like quit. If you can learn a process, you make $1 million, but then you use the process by which you made $1 million to make your next 5 million or your next 10 million. It's the same thing. It's just bigger size, right? So like when last time we filmed 2.5 years ago, you had just made nearly 1.7 or right around 1.7 million. The lessons from making that 1.7 million have now translated to your next 10.5 million. Do you agree with that?
100%. And it's just doing the same thing over and over again. But with trading, there's always something new to learn. So
it's not an exact science.
Yeah, when I was sizing up, as you can see, I made 800,000, then I made 1.5, then 2.4, and that was my hottest few month wave that I've ever had. But it was learning so many lessons because I was just going crazy, right? I was going nonstop until I started having major losses. There was no, like, I didn't know when it was going to stop, and I kept pushing myself. But then once you take those major losses, that's when you learn these.
You got to pull back.
Lessons.
You're like, whoa. You don't know your limits until you hit them, right? Like you keep pushing it, but then if you hit something, you got to pull back. And I know we're talking big numbers right now, so this doesn't apply to 99.9% of you, but I want to show you what's possible after a while. Even if, let's say, your record month, he's at 12.2 million, let's say you're at 12.2 thousand, right? And instead of making millions, you've just gone from, let's say, like 1,000 to 12,000, which is still fantastic. You need to think about your own journey. We all start somewhere, but the lessons that you learn from making those first like $10,000, $11,000. Then how do you size up? How do you learn from what you're doing and what you're doing right or wrong? And again, if you start losing big with your own account size, with your own comfort level, it's not even just dollar losses. You can also just be frustrated. Like I don't have big dollar losses. I was green in 2022. I'm green in 2023, but I'm not really getting my patterns, so I'm not sizing up, right? Like you want to trade, and we were actually talking about this, even if your patterns aren't working, even if like nothing's really working, you still want to trade like small size or even paper trade just to get a feel for the markets, because it's very difficult. Let's say like you don't trade for like 6 months, you go out, you go live, fantastic, then you see a hot pattern, but you're going to be very rusty, right? So like I think it's good to, even if you're in Dubai, wherever you are in the world, it's good to kind of like stay updated with the markets just in case one of your patterns that you find over the years that you're going to be in this game, hopefully, just when it hits, because you don't want to just have no trading for the past few months, then your perfect pattern is there and you kind of like forgotten a little. Like you're even when you're down, or have you had a down month lately?
Yeah, I had a down month in December because I cut all my bag holds.
Well, but I'm saying for trading. Bag holds, that's a whole different topic.
Yeah. August of 2022, that's when I suffered my HKD loss.
Yeah. You shorted too aggressively. You didn't realize. Tell them about HKD.
Yeah, so HKD was this Chinese IPO that ran from $15 to 2,500. And it was the most insane supernova that I had ever seen, I've ever been a part of. And I started shorting it, which I thought was a good pattern, shorting it. It's up from $15 to $150 to $200. Started shorting there. And I don't even think it was necessarily that I was going too aggressive, because I cut my losses every single day, but I was just losing 100 points or whatever. I was shorting 1,000 shares at 200 and then losing 50 to 100 points. I was like, this is crazy. The spread was $10-15 a share. And I just thought, if I can get a short position of 200 grand and fade it down and make 100,000, this is an insane supernova. It's probably going to dump up here at $200. And for me, I was super proud of myself because I cut the loss for 3 days in a row of 100 grand. And that's what added up to the major loss. So I was shorting it at 200, covering at 300, shorting it at 400, covering at 500, shorting it at 1,000, covering at 1,200, shorting it at 2,500, covering it at 2,700.
Did you have any profits? Did you get it on
No.
when it eventually did crash, or
No.
you were just done with it by then?
So I actually shorted the top. Like I said, I shorted at $2,500, and I think I covered it at the dead top at like 2,700. Like it was very close to the top, but my broker said they wouldn't allow me to hold it overnight because it was too risky, and it didn't crash. But the next day it traded at like $500. I would have made like 2,000 points. But yeah, at that point anyway, my account was very small because I took major losses, and I was just trading it in one account that I trade aggressively, and I trade these type of patterns. So
How much were you down for that month?
that month I was down like 400,000.
But you were happy with that.
Yeah, but later in the month we had BBBY, and I actually made a bunch back on that. I made, let's say, maybe 150 to 200,000 back, but I still finished the month down a couple $100,000.
But you learned from HKD and you took those lessons and applied it to BBBY.
Yes, I'm always applying lessons. I would say BBBY is a different type of runner because it had major volume, and it wouldn't really be in a situation where I'm losing 100 points on BBBY. But BBY I would compare it to AMC, GME, same type of runner. But that a liquid supernova saved my ass on ATXG, whatever it was.
Yeah.
That stock ran from 10 to 2,000 in one day, right? And I saw a lot of people, they got short at 200 like I did on HKD, $400, and it gapped up and pushed 800 to 1,000. So if I shorted 1,000 shares at 2, 3, 400 and I didn't cut my losses, I could have blown up $1 million that day. But I learned from HKD about these liquid low float Chinese scams, that the risk to reward and the potential risk with the low volume is way more than you'd ever anticipate. And we saw how big a company could really get. HKD, I think, was valued at $500 billion, zero revenue, is not even a company. HKD is now trading at like $5 a share. But a short squeeze can always go much higher than you think, especially if it's no volume.
But just listen to what he's saying here, because I know that, when we talk big money, like everyone forgets about the rules and like the lessons. They're just like, I want to, have big money. What I was saying earlier is that the lessons that he learned from making his first 1.7 million applied to the next 10.5. But also the lessons from his giant loss on HKD helped prevent giant losses from happening. Without HKD, he might have lost $1 million on the next one. So HKD, even though he lost several $100,000, grand scope, like big picture, probably saved him more because he wouldn't have had those HKD lessons for the next one. And now he also has those lessons for all future illiquid plays. And he'll remember HKD. For me, like I remember Cygnus E transactions when I lost $500,000. Never again have I done that. So even your biggest losses, while they suck and they're very frustrating, in the long run, they're not just useful, they're crucial. They're crucial to your education, because if you don't have those big losses, I'm not saying you have to lose 400,000 or 500,000 to like learn these lessons, but whatever your biggest loss is, remember it. Don't, brush it under the rug. Like you see this, like a lot of traders, like they don't, especially on Twitter, like 100% of traders on Twitter make money, right? They don't want to talk about their big losses. They don't want to think about them. For me, I still think about Cygnus E transactions. This was nearly 20 years ago, and I still remember those lessons. Anytime I trade a stock where I'm like falling in love with the technology or I'm believing the management, I always remember that loss. You're always going to remember that HKD, right?
Yeah, and another one would be MMNFF, which was my other $400,000 loss. So I lost about $400,000 on a short trade and a long trade. And MMNFF just saved me recently with the AI sector, given the AI sector did bounce, but AI, the stock, tanked about 50% with zero bounce for 2 days, and BBY as well tanked 30 or 40% with zero bounce for 2 days. And that's what happened with the weed sector when I lost 380,000 on MMNFF, was when I was dip buying it too aggressively.
Never
because
bounced.
Every stock I thought was supposed to bounce at least a little bit, and these stocks just, they don't bounce. And when you add to a loser, add, then you take a huge loss because you're playing this game. Okay, if it goes down more, I'll just buy more, I'll buy more, because it's going to bounce to give me an exit. But if it doesn't bounce, then you're screwed and you take major losses. So I don't do that averaging down anymore on, that was also somewhat a liquid of a ticker. But stocks that are spiking super high or stocks that are dropping super low, given there is opportunity on those stocks, but there is also massive risk to the upside if they keep halting up and squeezing, or if they just keep dropping without a bounce to get out. So those are two patterns that I've made a lot of money on, but I always remember that they can be my biggest losses because of the destruction on one side or the other.
And this is the thing, like a lot of short sellers will say they'll just keep shorting because like 95% of these plays do come down. But it's not about the 90 or 95% that work. It's always the 5% or the one that doesn't work. All it takes is one play to get away from you if you're going all in, if you're using leverage, if you think that it has to bounce or that it has to crash. And that one, that black swan, that's how you blow up. Traders do blow up. A lot of traders blew up on HKD. There was another giant short squeeze, ILAG. MMNFF was a crusher. All the marijuana stocks were a crusher for anybody who tried to just dip by. They never came back. So you always have to be fearful of that one or the outlier that doesn't play by the rules. That can blow everything up. Like, it doesn't matter if you, let's say you make 5 or 10 million on thousands of trades. You're like, oh, I'm so meticulous. I'm like making gains every which way. But then you get stubborn on one. And we were actually just going over this on RSCF, which they said that you had to like freeze the vaccine, and a lot of people believed it. No matter what you believe with the vaccine, RSCF like made it seem like they were like the key vaccine play, and they were a little penny stock, so it looked like a good deal. I had several students, several good dedicated students, not like millionaire students, but like upcoming students with good potential, with good futures, and they went down with the ship and they believed RSCF. I gave them so many warnings. I'm like, never believe these stocks, never believe these companies. They're going to screw it up somehow. And sure enough, they did. Several students did not follow the rules. They kept buying. They blew up. They're gone. So you always have to watch out for the outliers. And again, we're just talking about a few. Like, you've done thousands of trades. I've done thousands of trades, but a few trades really stick out. Remember those. Write them down. Whether you're learning from us, like remember Jack's MMNFF trade. Remember my Cygnus E transactions. Remember Tim Grittani. Tim Grittani lost a lot on DRYS. DRYS was a great short squeeze several years ago, and he was just on vacation shorting 1,000 shares. He's like, oh, of course it has to come down. It didn't, and he lost a lot. So like, you should learn from your own trades and your own experience, but if you're just starting, study what we're putting out there. This is why we track everything. This is why we talk about this. You don't have to just experience everything yourself. Like, it's like you're a blank slate. Like, this game hasn't been played for years and decades without you. It has. You're playing a game of catch up. Study all of Jack's trades. Study all of my trades. Study all of the top traders on Profitly. See what they really experience. But I will say that is good education to study the past. But when you experience it yourself with your own money and in real time, the emotional education is huge too. Like, you've learned a lot from your losses, and now you're carrying that emotional baggage, that emotional education with you on every future trade. No different than like, if you're married and your marriage turns bad and like, you get divorced, you have that emotional baggage. Like, if you're newly divorced, you're not just like, hey, I want to get married again. That was fun. No, you're like, yo, marriage is crazy, just got divorced. And you think about that. With stock trades, with your losses, think about them. Don't brush them under the rug. Really think about what you did wrong. Just like I said, I lost nearly $7,000 on BBAI. I'm trading small, so $7,000 in the grand scheme of things isn't that big. But I broke my rules, and it kept coming down, and I was like, it has to bounce, it has to bounce, it has to bounce. And it didn't have to bounce. And fortunately, because I've done this in the past, I was sized down, even though I was, wrong. It wasn't that big of a loss. And interestingly enough, it did bounce like the next day. So I wasn't totally wrong, but I was too early. So you can be wrong on a play, long or short. You can be completely wrong, like it never bounces or it never crashes, or you can be a little too early. There's a lot of different ways to like be wrong. And you're learning how to be wrong. And you're learning how to minimize the damage when you're wrong. Like, we're going to do another video. We're going to talk about Jack's bags. I think that's like a good segue into the next video, because it's not just short-term trades too. You can swing trade, you can invest, and there's lots of ways to lose money in that too. Stay tuned.